Welcome to Talk Tickers for today's deep dive into the details of the latest earnings calls.
And today, we're really unpacking the first quarter 2025 earnings call for PLBY Group. We've dug through the materials and we're ready to share what we found interesting.
Absolutely. So our mission today is basically to give you the key results, the main takeaways first, and then, really get into the weeds on the operations, the strategy shifts, and what management's signaling about what's next.
Okay, let's just jump right in then. The results. The big headline here, I think, is definitely the positive adjusted EBITDA they reported for the quarter.
Yeah. What was the number?
Came in at $2.4 million.
Okay, $2.4 million. And management, they were pretty quick to add context there, weren't they?
Uh-huh. They pointed out it actually would have been higher, like $3.4 million, if you back out $1 million in personnel costs.
Costs that were cut right at the end of the quarter. So you see that impact straight away.
Exactly. So that positive EBITDA, it's a pretty big marker for them. And driving that, we saw really huge growth in licensing revenue.
Huge is right, including that big By-Bork deal. It was up, what?
Striking 175% year over year.
Wow, 175. Yeah, that's massive. And, it wasn't just By-Bork driving it, was it?
No, that's a key point. They specifically said, even if you take out the By-Bork contribution, the rest of the licensing business, the sort of core stuff, was still up over 50% compared to last year.
Okay, so that points to some real underlying strength or recovery there too.
Exactly. So let's dig into that a bit more, starting with By-Bork, because that's clearly the main engine right now. It's adding a steady $5 million each quarter to licensing.
Right, $5 million quarterly. And the deal itself has that minimum guarantee, correct?
Yeah, $20 million a year guaranteed minimum. And then PLBY Group also gets a piece, 25% of the operating profits above that $20 million threshold.
Got it. And there was something specific about a big payment coming soon.
Yes, exactly. This really jumped out on the call. There's a pretty significant $20 million cash payment scheduled to come in on July 1st this year.
July 1st, $20 million.
Yeah.
Okay. And how does that break down? It wasn't all just a regular guarantee payment.
No. So that $20 million includes the $5 million minimum guarantee for the next 2 quarters, so Q3 and Q4. But then there's also a $10 million security deposit in there.
A $10 million security deposit.
Yeah.
Interesting. What's that for?
Well, they explained it's essentially a prepayment. It counts as the payment for the last 6 months of the whole 15-year licensing term.
Ah, okay. So kind of locks in the end of the deal payment up front. That's a decent chunk of cash coming in near term.
It is, and it speaks to the partner's commitment, I think. Now, management did say they expect the total profits over the 15 years to be higher than the minimum guarantee. But they cautioned that, the early years involve By-Bork investing pretty heavily in product development. So maybe don't expect huge profit sharing right out of the gate on top of that minimum.
Fair enough. Okay, so that's By-Bork. What about their own retail Honey Birdette?
Right, Honey Birdette.
Yeah.
The U.S. business there is roughly $35 million or so.
How's that doing?
They said they're seeing momentum right now, actually running ahead of their plan in the second quarter. Part of that, they mentioned, is because they're up against an easier comparison from last year.
The easy comp.
Yeah.
So maybe some heavy discounting last year, making this year look better?
Could be something like that, yeah. But looking further out, like second half of the year, Q3, Q4, they did flag a potential issue.
Which is?
Chinese tariffs. Based on what they know now, they think the impact could be around $1 million to the business.
Okay, $1 million. So are they just absorbing that, or?
No, they're taking steps. They've already put through a 10% price increase on a Honey Birdette product.
10%, okay.
And they're also tweaking the thresholds for getting free shipping. Maybe you have to spend a bit more now.
Right. And are these price hikes just temporary to cover tariffs?
Apparently not. They said the intention is for these increases to be permanent. So the idea is, look, even if tariffs don't go up more, this should still give them a lasting benefit.
Makes sense. And if tariffs do rise?
They mentioned they have other levers they can pull. Didn't specify exactly what, but they seem to have contingency plans.
Okay. And quick sidebar, anything on the corporate stuff? That equity investment vote.
Oh, yeah. Quick note on that. The vote date for the second equity investment got pushed. It's now going to happen at the annual meeting, which is scheduled for June 16th. Just a heads up for anyone tracking that.
Got it. June 16th. Okay, let's circle back to licensing then. You said ex-By-Bork was up over 50%. What else drove that besides, just general strength?
The other big piece they called out was rebuilding their China licensing business. That apparently saw a significant year-over-year improvement.
Oh, okay. So China's coming back online after some rough patches. That's good news.
Seems like it. And they also sounded pretty positive about the future pipeline. They talked about a strong pipeline of new deals.
New deals, okay. When might those kick in?
Expected to start contributing revenue in Q3 and Q4 this year. So later in the year, we might see more licensing drivers coming through.
Interesting. So overall then, management seemed to frame this Q1. How?
Well, they really emphasized that this was the first quarter they hit positive adjusted EBITDA since way back in 2023.
Right. That's a big deal. Almost 2 years after they started that whole shift to the asset-light model.
Exactly. Focusing on licensing the brand, not owning tons of physical stuff.
So with that positive EBITDA now achieved, what's the message going forward? Still just cutting costs?
That seems to be shifting. The call definitely signaled a change in focus. Cost reduction is, still ongoing. They said plans continue there.
But the main goal now
is growth. Leveraging this base of hopefully stable, high-margin licensing deals to actually start generating cash as a company. That was pretty explicit.
Cash generation. Okay. So where do they see that growth coming from specifically?
They highlighted a few key areas. Gaming was one. So they're seeing a lot of traction there right now.
Gaming. Okay. What else?
But this one's interesting. Hospitality and location-based entertainment, LBE.
Like the old Playboy clubs.
Yeah, kind of, yeah. They mentioned being approached by top U.S. operators about developing new Playboy clubs.
Wow. Okay. Is that happening soon?
Well, the actual building of clubs, that's a longer-term thing, right? Maybe a 1-2 year project.
Sure.
But the licensing deals related to that, they're apparently in the pipeline now. Could be signed, alongside other deals later this year.
Gotcha. So the licensing part could come well before any physical club opens. What other growth areas?
Content and media. This was a big focus too. Remember they did that small print run of the magazine?
Yeah, I saw that online. Sold out fast, didn't it?
Sold out online, yeah. And apparently had strong sell-through, people actually buying it at Barnes & Noble who had the exclusive in stores.
Huh. So print's not entirely dead then?
Apparently not for them, at least not this experiment. So building on that, the plan is 1 more issue this year and then targeting 4 issues next year.
Okay, 4 issues. Mm-hmm. And beyond the magazine itself?
They see other revenue streams from content, things like calendars potentially, maybe TV shows. They mentioned both traditional linear TV and digital streaming.
Right.
And they framed these as almost like quasi-licensing streams, high profit margins expected.
Interesting. Any other content plays?
Yes. This one caught my ear. Paid voting.
Paid voting, like for Playmates.
Exactly. Apparently, this has a history at the company of generating like significant revenue and even EBITDA.
Really?
Yeah. So they're planning a new version, slightly different format, but designed to be an always-on, ongoing competition.
What's the goal?
Engage the community, help select future Playmates. They're gearing up for 12 a year, and, well, bring back that revenue stream.
12 Playmates a year, okay. Mm-hmm. And when might this launch?
They think it could launch in the second half of this year, so potentially impacting 2025 results.
Wow. Okay. And you mentioned calendars, too.
Yeah, ancillary products like calendars. Said historically, these did multi-million-dollar sales annually. They're planning one for November alongside one of the magazine issues.
Got it. Anything else on the growth front?
Sponsorship revenue. They saw some in Q1, and they expect that to continue and grow as they sort of refine the whole media and content strategy.
So putting it all together, management sounds pretty optimistic about growth.
Yeah, they frame these opportunities, gaming, LBE, content, voting, as some of the strongest they've seen in maybe 3-5 years.
But timing-wise, it's not all immediate.
No, definitely not. They were clear that a lot of the bigger impacts, especially things like LBE, is probably more 2026 and beyond.
But some stuff like the paid voting or the calendar could hit the second half of 2025.
Exactly. That seemed to be the timeline.
Okay, so let's step back. For you listening to this, what does it all mean? What should you take away?
Well, first off, that reported positive adjusted EBITDA is definitely a key signal, right? It suggests they might be turning a corner after that whole asset light shift.
Yeah, it's a milestone, at least on paper for Q1.
And for anyone following the stock, really understanding why licensing grew so much is important. It's that mix, right? The big PLBY contribution, yes, but also that underlying recovery, especially in China, and the promise of new deals.
And the overall story seems to be changing now.
Definitely. The narrative feels like it's shifting away from just survival mode and cost cutting towards, actively looking for growth and, crucially, focusing on generating actual cash.
Right. And looking beyond just licensing T-shirts towards things like gaming, maybe clubs again eventually, and really trying to monetize that brand community through content.
Yeah. And don't forget the operational side, too. How they're handling things like the tariffs, putting through price increases, managing costs. That gives you a glimpse into how they're executing day to day and what's still, a pretty tricky economic environment out there.
It does raise a key question, though, doesn't it? If you're looking at this company, how much value do you actually assign to these future growth ideas? The potential club licensing, the paid voting coming back, when they're still kind of early stage or just in the pipeline.
Exactly. Versus the licensing business they have right now, which seems more stable and proven, especially with By-Bork. It's that balance, isn't it? Weighing the current reality against the future potential.
Yeah, definitely something to think about.
Okay. So let's put on our totally hypothetical, wild speculation hats for a moment. And I have to stress, really stress, this is absolutely not financial advice, just blue sky thinking based on the call details.
Go on. The disclaimer is noted. We're just spitballing here.
We talked about that specific $20 million payment coming in from By-Bork on July 1st, right?
Yeah, the guarantee plus the security deposit, big chunk of cash.
So what if, purely theoretically, someone looked at buying really short-dated call options, like ones expiring just after July 1st?
Okay. What's the thinking there?
Well, the idea, and it's super speculative, is that maybe the market isn't fully appreciating that specific large cash injection hitting the balance sheet.
You mean the news is out there, but maybe not fully priced in?
Potentially. So the bet would be that when that $20 million actually lands, confirmed, it could cause a temporary pop in the share price.
Ah, I see. A short-term catalyst trade. But it sounds incredibly risky.
Oh, massively risky. It's leveraged, right? You're betting a small premium on a potentially big but uncertain price move right around that date. If the market just shrugs or the news is already fully baked in,
you lose the whole premium. Poof.
Exactly. Total loss potential. But if it worked, the percentage gain on that small premium could be, notable. Again, purely for discussion, not a recommendation in any universe.
Understood. Hypothetical corner case. Okay, so let's wrap this deep dive up then. Quick recap.
Sure. So PLBY Group Q1 report. They hit positive adjusted EBITDA, saw really strong licensing growth driven heavily by that By-Bork deal, but also saw recovery in China.
And they've clearly signaled a pivot now. The focus is shifting towards growth and generating cash. They're pointing to new opportunities, specifically mentioning gaming, hospitality, or LBE, and leveraging their content and brand community.
Right. Things like bringing back the magazine in a bigger way, planning that new paid voting system, maybe even calendars again.
And operationally, they're managing challenges like potential tariffs with actions like price increases, while also noting some early positive signs from these new initiatives and pipeline deals expected later this year.
Yep. That pretty much covers the key points from the call.
And just one last time, folks, remember, this whole discussion is just based on the earnings call information itself. It is absolutely not financial advice. Trading, investing at all involves significant risk. Always do your own research.
And maybe leave you with this thought to chew on. As you process all this, think about how you would evaluate the potential impact of those future revenue streams. The paid voting, the club licensing, when they're still mostly in the planning or pipeline stage. How do you weigh that potential against the more established business they have today? That feels like the central question right now.